Now, another important item to be aware of, because you'll see it again, is when there's a need for issuing some bonds as a result of the department. You see here, how are the bonds issued? Cash comes in and there's a credit to bonds payable. Now we know bonds payable is a long-term liability, but we record long-term liabilities in internal service funds. We also record capital assets. As you can see, the department acquires long-lived assets, and we record those capital assets in the internal service fund. When we bill other departments for services rendered, sorry about that, I just answered my phone, but moving on, the billings to other department, when the department bills other departments for various costs, you can see here, services rendered, the department bills the utility fund for $300,000 and bills the police department, fire department, and other departments for $800,000 total, the other departments. So it shows a accounts receivable from the general fund, or due from general fund, $800,000. Accounts receivable from utility fund, or due from utility fund, $300,000. And we would show operating revenues of $1.1 million, because we've provided the service, and at that time we can record that revenue. As you can see here, even though we are showing those revenues based on 1.1 million, the general fund and the utility fund are going to have expenditures of 1.1 million. And so these transactions are really interfund transactions that don't affect the government as a whole. It's just interfund dealings. And so ultimately, in the end, because these aren't affecting outside vendors, when we get to the government-wide financial statements, some of these are going to be eliminated, because the 1.1 million in revenues that's going to be coming into the internal service fund is identical to the 1.1 million of expenditures that the general fund and the utility fund are recording on their fund statements. And so ultimately, in the government-wide, when we record them as a whole, those will offset each other and wipe each other out. Depreciation and accounts receivable, we record all expenses as we would in the full accrual basis. This page just talks about establishing rates. The most important thing to know is rates need to be established to cover the costs. That's the most important aspect to be aware of when we talk about internal service fund. Now, as we move on here, don't worry about the insurance premiums examples, because we're not going to touch on that. Primarily what we're going to focus on relate to the internal service fund transactions. Know about various bonds. Revenue bonds are primarily used to support proprietary funds. So one thing I do want you to be aware of, when we look at problem 9.1, okay, here we go. So let's look at problem 9.1. Enterprise funds are accounted for like comparable businesses. Nevertheless, they have some quirks. The Green Hills Water District was established on January 1st to provide water service to the suburban development, and it counts for its operations in a single enterprise fund. During the year, it engaged in the following transactions. So the first transaction all the way down here, our goal is going to be to prepare journal entries to record these transactions. So it issued $6 million of revenue bonds. And so as we go here and look at the transaction for those revenue bonds, you'll notice we're showing a transaction of debit for cash restricted for purchase of equipment, and we're going to credit our bonds payable, record the issuance of revenue bonds, because those monies are set aside for a particular purpose. Next, we've got for $4,500,000 it purchased the plant and equipment of the private water company that previously served the area. So in order to record that transaction, we're going to show the asset, plant and equipment, $4,500,000. We'll credit our cash restricted for the purchase of equipment of $4,500,000. Next, it incurred $500,000 in costs to improve and expand the plant and equipment. Now, just like in for-profit accounting, when there's improvements to assets, that gets capitalized. If it's pure maintenance, then that would be expensed. But in this case, the $500,000 of improvements are added to the asset, plant and equipment, and our cash restricted for the purchase of equipment is going to be credited there. As we move on with number 4, it billed customers for $1.8 million, of which it collected $1.5 million. We're going to show here in our transaction, we have cash of $1.5 million, we have accounts receivable of $300,000, and then we have a credit to revenues of water for $1.8 million. Now it billed and collected $200,000 in tap connection fees from developers. The actual cost of the hookups was $140,000. So we can see here the $140,000 of plant and equipment, $140,000. We have credit of cash of $140,000. That's the cost of the hookups. And then we've got an additional transaction showing the cash that came in of operating revenues, $140,000, and the capital contribution to those tap fees of $60,000. So that's recording the collection of those fees. Finally, with number 6, we show it incurred the following operating costs, all paid in cash: water purchases of $850,000, labor and contract services of $320,000, interest of $80,000, supplies and miscellaneous of $60,000. So you see here purchases of water expense or cost of goods sold $850,000, labor and contract payroll $320,000, interest of $80,000, supplies expense of $60,000, a credit of cash gives us the cash of $1,310,000. Next, we've got depreciation recognized on its assets of $350,000. As you can see here, we have depreciation expense $350,000 and accumulated depreciation of $350,000 there. Now, the next thing that we're to do is to create a year-end statement of revenues, expenses, changes in net assets, along with a balance sheet. So if you go through this and provide all the necessary debits and credits, we will show sales of water, $1,800,000, tap fees of $140,000 to have our total operating revenues of $1,940,000. Then from there we've got our various expenses with a net operating income of $280,000. Then we'll show non-operating revenues of $60,000 for a total income of $340,000. So we are beginning this, we have net assets at the beginning of the year of 0. Our net assets have increased $340,000. In the balance sheet, or the statement of net assets, we have cash available now of $250,000, accounts receivable of $300,000, for total current assets of $550,000. Then when we take all our various non-current assets that are cash that's restricted, the plant and equipment, so we show total non-current assets of $5,790,000 for total assets of $6,340,000. We've got our bonds. We've got our invested in capital assets, net of our bonds, because that's always recorded, the capital assets less the outstanding liabilities. Then we have what's available, the restricted for purchase of equipment, and then the unrestricted for our total net assets here of $340,000. As you can see here, our total assets need to equal our liabilities plus our total net assets. So our total assets of $6,340,000 equal our bonds is $6,000,000 plus $340,000. So finally, in some jurisdictions, water districts may account for their operations in an enterprise or in several funds as if they were full-service governments. If a water district chose the full-service government, then it would report all revenues and operating expenditures in the general fund and would maintain other funds as needed. So how would the financial statements differ if it chose to prepare statements as if it were a full-service government? What's going to be different here is if we report this in a government fund, the capital assets and long-term debts don't get reported in those fund statements. They're only going to be shown in some supplementary schedules showing those. They're not going to be reported on the balance sheet at all because we don't report long-term assets or long-term liabilities on the balance sheet for governmental funds. Now this is assuming we don't have an enterprise fund, but we just treat it as a general fund. The bond proceeds would have been put into a capital projects fund if it's a general fund activity. Now, when we have it as an enterprise fund, we don't separate those bond proceeds and put them in a capital projects fund. Since we're on the full accrual basis, all of our long-term debt gets recorded in our enterprise fund accounting. If we would have put this in the general fund instead of the enterprise fund, we wouldn't have depreciated any assets because we don't worry about anything but current resources. And finally, the accounting wouldn't have been full accrual basis. It would have only been modified accrual basis, which means we only care about short-term assets within 60 days and very current liabilities within 60 days.